Portfolio Builder members, today is May 31st. It's 2 o'clock in Mountain Standard Time, 4 o'clock Eastern. The stock market just closed. We've been carefully watching the 275 strike. And the reason why is because our basic program is protected to that level. And so we're sitting on a potential $130 profit per contract, which is about 5 times our normal return target. And so the downturn in May has made our strategy a lot more profitable than it normally is. And so you can see there's a huge open interest sitting at the 275 strike in the put option market. That means Wall Street is agreeing to buy approximately 3.9 million shares of the SPY for $275 a pop. And so every time the market got close to that level, we watched the people who are short the SPY have to cover, and that's where we get these big spikes up. So the market did close at 275.37, and we're protected to about 40 cents below 275. So we're on target to hit the maximum profit with our trade alert from today, which was to collect $1.87 or $187 a contract. And agreed to sell our shares for $276. So that's more than the SPY is currently trading at this moment. So we're sitting very well, and we'll cover this Monday. So if we had closed it at the close today, you could have bought it back for $1.17 and picked up $70 profit per share on the covered call portion of that trade. So again, the action to take on Monday around noon Eastern will be to buy to close, and then we will roll the position over to the next expiration. So we'll go to June 5th. I will decide which strike price has the most support underneath it. So again, we simply look at where Wall Street's willing to buy a tremendous amount of the SPY ETF and then sell our covered call right above that level, and it makes for a very good setup to generate profits in 3 directions. It allows us to make money if the stock market goes up, flat, or down to where there's a huge buy order sitting in the market to support that price on the SPY. So this is our basic program. You're not going to get rich overnight with this program, but what you will do is protect your assets to the downside and generate consistent returns. Our target profit is around 1% a month. Sometimes we do better and make 2%. What we hate to do is lose money. And so because you're willing to show up to write a covered call every Monday, Wednesday, Friday, which are the 3 days that there are option expirations on the SPY ETF, it allows you with a 2-minute trade to protect your capital and turn your portfolio into more of an investment bank. Instead of speculating whether the market will go higher, we can simply own a very popular asset and then lend it to stock speculators. Now, in our diamond level membership, we only trade on Tuesdays, and it inherently is going for a larger return of around 2 to 3%. Now, to do that, we do have to take on a little more risk. We have to be willing to have a little more volatility. And so this is one of the few weeks our diamond program has shown a small loss. We were sitting on a 11.6% return Tuesday, and we currently are sitting on a 10.7. So that is a drop in value of less than 1%. But if we do look at what the S&P 500 has lost during this same period, it went from 283 when we wrote the covered calls down to 275. Well, folks, that is a 2.8% loss on the SPY. Now, I'm sure if you own other stocks, you're down way more than 2.8% because these are the safest stocks out there in terms of having the largest market cap, the most profits, the highest credit ratings, the biggest inflows from ETFs, and the largest budgets for corporate buybacks. So while we lost 0.9% and are set to generate a big profit if the market does bounce up just a few points between now and Tuesday, everyone else lost a lot. So this product is sitting on these positions, no action to take. Now, if we had gotten to a riskier level on the SPY going into the close today, we would be looking towards some sort of extra hedge for this portfolio. But right now, we do have the Apple position. So this is our core hedge that protects the total portfolio. And the reason we're doing Apple instead of a put option on the whole basket of stocks that this diamond level portfolio holds is because I do believe Apple will be the single most vulnerable stock in the US-China trade war. So we could spend a lot of time getting into that. It's currently up 36%, and if Apple gets anywhere near $150 price point, this will skyrocket in value and really help protect our portfolio. My expectation, though, is that the market will rebound, and this will be sitting at a profit week over week. And again, to get the target 2 to 3% return, we do this by getting rid of the SPY. These are the core positions the SPY buys for you anyhow. But now we can create strike prices at higher or lower levels on a per security basis. So we can look at where Wall Street is predicting the price will go from its open interest and simply be a parasite on the back of Wall Street. Now, our Whale Club product missed out on a huge amount of profit this week. I thought we were near a top at 128 on the TLT and sold a in-the-money covered call for 126. We made $13,000 in this portfolio week over week and are in cash. But if we had held on to the trend a little bit longer on the TLT, this continued to pop higher and higher. I think the TLT is ready for a sharp crash. If we do take a look, the rate that the 7-year bond is paying is 2% a year. That's insane. That is less than inflation. You have no reason to buy that unless you want to break even. And with tariffs coming, inflation could overshoot well above 2. So people are simply buying the bonds because they think they can flip them for a quick profit. And Jeffrey Gundlach, who many called the Bond King, has a net worth of $2 billion. He thinks that we are near the top on the bond market and has hours and hours of presentations you can study if you do sign up for his webinars about why. And it's just a simple supply and demand issue. Anyhow, our Whale Club is currently in a 0.5% position, shorting the TLT and LQD. So these are two tiny positions that we're intending to build on over the coming months and slowly get to probably a target of around 2 to 4% exposure with put options that are long the TLT and LQD. But the most exciting part of the Whale program is that we're waiting for the VIX to pop above 30, and it's getting closer by the day. It's at 18. Once it pops above 30, we will rotate out of cash, which is what we're currently in. We traded the TLT all year, but now we do believe that is overbought. So the plan is to rotate into Amazon and Google. So we have actually zeroed out these two to be the only stocks in this portfolio. So it'll have 100 shares of Amazon and 100 shares of Google as the minimum investment to follow the Whale Club when we do rotate out of cash and into 100 shares of each of those, where we'll sell the in-the-money covered call during a panic, a fear in the market. And this should be a highly profitable small window of time that we can take advantage of the equities market and then plop right back into some boring bond market predictions. Finally, a small uptick in the Kospi, the South Korean index, which does lead me to believe next week should be a relief rally after the sudden drop from the surprise Mexican Trump tariffs. Dollar continues to dominate. And what we're looking at here is the inflation. The next thing we'll be watching out for is upticks in inflation from tariffs. That creates substantial increases in costs, and Trump is on a rampage. He is creating tariffs with everyone. So perhaps it's a small step back to make a leap forward. Plenty of arguments for why he's doing everything he's doing. And so I'm not here to bash Trump. All this volatility is great for our strategy. and I think that at the current pace, we may just hit that 30 VIX in no time, which will make our strategy extremely lucrative. Now, what I'd like to do next is take a look at some of the content I've collected today. Some tweets. David Rosenberg, in the name of national security, tariff man just put the squeeze on U.S. profit margins in the business sector and real spending power in the consumer sector. Notice how Trump no longer tweets about the stock market. Trump, in order not to pay tariffs, if they start rising, companies will leave Mexico, which has taken 30% of our auto industry, and come back home to the USA. Mexico must take back their country from drug lords and cartels. The tariff is about stopping drugs as well as illegals. Oil is getting hammered as global growth is clearly slowing down dramatically. Now, prices and things like oil are very whipsaw and overreact to situations to predict the future, which is a very interesting thing about how quickly the market can react to news and reprice immediately. Deutsche Bank is a company out in Germany, a bank that we're closely tracking as it gets near the $6 level. Many people predict it could go bankrupt. This could be similar to Lehman Brothers going out, which might be lights out for the stock market for a period of time. U.S., according to this article, is dependent on China for 80% of its medicine. Foreign automakers say U.S. tariff on Mexican imports threaten the jobs of tens of thousands of Americans here in the United States. Trump approval rating hits 2-year high. Oh, great. If that's true, he might just keep piling on the tariffs to get what he wants. Here's an interesting article about who's buying all the sub-zero debt. There's $11 trillion in negative debt. And so the article goes to say it must be these various global index bond ETFs. So I'll dig into that more. But it seems the world is trying to play the momentum trade on bonds. Buy them now so you can sell them later for a profit. Of course, once the problems causing all this are alleviated, this could create a sharp reversal in the bond prices, send yields higher alongside the stock market. So Whale Club is out of the TLT and slowly building a short position on this 30-year bull market in bonds. Little chart showing the huge amount of negative global debt that's been piling up in terms of the negative interest rate bonds. Here's some visuals on the crude oil prices getting hammered. Here's the one-day move from 66 down to 64.50. The 3-day look, 1 month, year to date, 1 year, and the 5-year. So not as bad as that 2015 crash, which, remember, my friend had just got a PhD in geology, moved to Texas, to Houston to work in a fracking company, went from dead broke to making $180K a year for about 6 months in 2015, and then got laid off as oil prices crashed. This stock cats guy is funny. Everyone calling for a Fed rate cut, be careful what you wish for. And he just points out that lowering rates doesn't necessarily save the stock market. During the 2000 crash and the 07 crash, they cut rates all day long, 10 times in 07, 08 crash, and 13 times in 2000 through 2003 until it finally revived the market, pumped enough money into the financial sector to continue blowing up the money supply bubble. Little closer look for you. Gold is finally taking a bid. Peter Schiff is probably dancing around his house if you listen to his podcast or YouTube channel. And Bitcoin's down, so he's probably having a great day. Lumber is towards relative lows. The entire energy sector is just getting hammered right now. Expectations for future developments are getting crushed. Agriculture getting crushed from the Mexican tariffs. And meanwhile, the conversion rate for the Chinese currency against the dollar is tiptoeing to 7. Now, I think that from the sound of it, it looks like things are going to get a little nastier here before the two come to a deal. And we'll see just how long it does take. How far will Trump let the market crash before he makes some sort of truce with China? But the higher this goes, the more rich Chinese will start flowing their money into gold, the dollar, if they can, and Bitcoin. So I think the run up on Bitcoin still has some legs, but it will be short-lived. The second the trade war has some sort of truce, even if it's nothing more than a break, look for a big pullback in those cryptocurrency prices. 10-year yield continues to collapse. 30-year yield continues to collapse. I expect a sharp rebound soon. And of course, that's why our whale club is building that short position. Our basic program is protected to 275. I do expect to see a little bit of relief by Monday. Of course, one Trump tweet away and we might lose a couple more dollars on the SPY. But I think that he's caused enough pain to give it a break over the weekend. We will see. Either way, we will be prepared on Monday to take advantage of any bumps in volatility. Here's the 5-day look, 1-month look, 1-year look, and the 10-year look. TLT hitting 131.83. Emerging markets doing well. This is somewhat of a surprise, although they spent all of 2018 crashing, whereas the U.S. market only crashed for 3 months in 2018. So they've already been considerably repriced. Their market caps are a lot less, way less cash sitting in those markets to be so scared about. So in general, most likely people holding these ETFs are willing to hold on to a little more risk because it represents a lot less of their portfolio. So anyways, to see the smaller markets rebounding is a good sign. That means that probably the U.S. market should start to rebound next Monday as well, which simply helps us figure out where to sell our strikes and how much protection do we want to have in our covered call. FXI is the large cap China ETF, so it's only down about 5%, very similar to what the U.S. stocks are down during the same period. Beyond Meat up 5% again today. That company is just on a rip. Lyft is up 5%. So definitely keeping a look at some of these companies that have high valuations and lose tons of money. Should probably put Netflix on there, but they certainly growing very rapidly. But when these start to tank, that could be a good canary in the coal mine for us to know we need to add a lot more downside protection. And Beyond Meat again is the fake meat made out of pea protein. Here's some of our trade war stocks. Sprint and T-Mobile getting hit the worst today, down 4%. Not in our portfolios, but something we're paying attention to as they are deeply tied to the technology race with China over the 5G network. 5G network has the potential to have about 1,000 megabyte a second download from your phone, which is insane. That's faster than I have from Comcast when I'm directly plugged in, or about the same, but still, the power this could have is intense. Also, potentially huge health risks. So this be something to watch over the coming years as this technology will be rolled out. Apple, the most concerning stock for the trade war, one of the biggest positions in both the SPY and the QQQ, right under Microsoft, one of the most important companies in the world for America, for Warren Buffett. And they have the most corporate buybacks, so we're willing to hold on to this through good times and bad as we get a huge premium for selling the covered calls on Apple. Huge option demand on Apple. So again, we are down about 0.8% against 2.8% against the SPY index. However, I expect by Tuesday the market jumps back up and we hit our maximum return for the week or close to it. So not worried about that portfolio. And again, to get the higher yield, we can't be covering our positions every day like we do with the basic SPY program. So again, basic program is aiming for a 1%. If we're lucky, market's just going perfectly our direction every trade, 2% per month return. Whereas in the diamond program, we're aiming for closer to a 2 to 3% monthly return. So you do take a little more risk to achieve the higher returns. The high yield portfolio is only trading Tuesday at noon and will rarely make any trades outside of that. It's designed to be more passive, to take advantage of the option markets for each individual stock, and it's done a great job to date. Whale Club is in cash. We got out of the TLT a little bit before the top. We'll see just how high it could fly. A few years ago, it hit as high as 145. So this could go way crazier than everyone thinks. But we just rode it for 6 months and generated a huge profit for the Whale Club. Now it is building a tiny position to short the TLT and the LQD. LQD represents the investment grade corporate bond market, which half of that is fine. That's our companies like Microsoft and Apple and Google and Amazon. You know, they're very creditworthy. They have plenty of money. They'll pay back their loans. But half of it is rated at a triple B level. So half of the funds in the LQD hold BBB rated bonds. And those are where the big risk lies in the LQD. And at some point, I expect them to get re-rated lower, which will reprice LQD much lower. So that's why we have a short, or rather a long put option on LQD in tandem with our put option on the TLT. Trump, yesterday's Border Patrol agents apprehended the largest group of illegal aliens ever, 1,036 people who illegally crossed the border in El Paso at 4 a.m. We're actually in New Mexico, and very funny, one of our children left their bike out in the front yard. I have a video from our Nest Egg camera seeing someone stealing our bike right out of the front yard. So you can understand why he is trying to put some pressure on the Mexican government to control the border on their side of the line. $5 trillion wiped off the global stock market. Mexico's foreign minister says process of negotiations has started. Says he's about to board a plane for Washington. Now that is some fast reaction times. Moody's new tariffs would also raise prices for U.S. consumers, as Mexico is the U.S. largest supplier of agricultural imports, including vegetables, fruit, wine, and beer. Pullback in Bitcoin. We're still getting ready to issue your fresh sheets. That's going to have you consolidate. But I want to tell you to consolidate when the market's at a high. So I do think that the chances of the China-U.S. tensions ending this week coming up are low, which means if it is escalated and they do threaten or raise the tariffs on the rest of the imports from China to U.S., that would more than double the amount of goods being taxed, which would create potential more devaluation of the Chinese currency, which could create a final big push of Chinese billionaires rushing into gold and Bitcoin. So I think we do have one more big push before we consolidate from the altcoins into the core coins. From there, we'll tell you to sell half and then finally go to cash. So we want to be completely out of cryptocurrencies well before a trade war deal is even put on hold, as that could quickly cause a significant pullback in these elevated cryptocurrency prices. And again, I like cryptocurrency in the long run, but the folks we're serving, you guys could barely turn on your computer, much less work a cryptocurrency wallet and secure your coins and not be ripped off by hackers or scammers. So I think it'll be my son who will live in the generation of digital currencies, whether it's Bitcoin or digital dollars. Facebook's making their own coin, who knows? But we can simply follow the money. Where the big money is putting their bets, that's what we like to do. Be the parasite on Wall Street. And so that's what we're trying to look out for. So if you like our video, please hit the like button below, subscribe to the channel, press the little bell so you get our instant notification. If you go to portfoliobuilder.io, you can sign up for a free trial. If you're already on a free trial and you want to upgrade, call Dean 505-322-7515. You'll get a free 30-day access to our Diamond and Whale Club trade alerts on top of the basic trade alerts Monday, Wednesday, and Friday. So call Dean 505-322-7515. He can sign you up over the phone, walk you through everything about our program, and we'll help you protect your capital and generate nice, boring, consistent returns. Next trade alert due Monday, noon Eastern. We've been coming out a little earlier. And then a follow-up update video in the afternoon. Thanks again.